Good evening, traders. It is Samurai Trader here to give a recap of the NQ 133 tick bar chart for the 4th of the 3rd 2015, or if you are down under in Australia, it's the 5th of the 3rd. And it was a little bit of a challenging day, but I'd like to run through some trades that we took live. I took 4 live trades, as you're about to see, 4 out of 4. However, it could have been a very challenging day. Now, one of the things I really want to say here is that for a newer trader looking at these charts, they look very busy. Well, how do you learn how to ride a bike? You get on, you pedal, and you pick it up over a period of time. How do you learn to drive a car? Exactly the same. You take some lessons, you pick it up, and over a period of time. Likewise, when you look at the indicators that I have on my chart, initially they can appear confusing. Natural fact, there's 2 or 3 of those indicators I can remove, and when I'm trading or training, I should say, a new trader, I actually simplify the chart even further just to make it easier. So I started a live training session at 3 a.m. this morning. We went through for a good 2.5 hours. So I'm going to show you the live trades I took, but I want to explain some lead-up trades. Now, these are 95% mechanical in nature, and as I say, if you're not sure, don't take it. Now, there's a big difference between not being sure and not taking it, because it conflicts the rules compared to letting yourself think. In other words, sometimes we need to stop our thinking. We need to trade what we see, not what we think or feel. Let me say that again. Sometimes we need to trade, well, not sometimes, we need to trade what we see, not what we think, because it's very, very easy in our business to let emotion get involved. And I just wanted to quickly put this up, and as Robin Sharma, if none of you have looked at his work, if you go to YouTube, Robin Sharma, he's probably one of the greatest business thinkers and personal development coaches in the world today. He ranks up there with Tony Robbins and some of the others that are great. As Robin says, dream big, start small, act now. So when you first start trading with me, or if you're going to start trading full stop, start small and build from there. Now, as I say to everyone, subscribe to my YouTube channel and be kept up to date. There's no need to spend thousands of dollars for strategies and setups. That is, you can subscribe to my channel. You'll pick up a lot of information over a period of time. If you want to fast track that, if you want to accelerate your learning, I do training, I do coaching. Most of my clients are based in Canada, USA, or in Europe, and of course, thanks to Skype and GoToMeeting, that's how we do it. If you'd like to have a chat to me, have a free 15-minute consultation on Skype, please drop me an email. The new website's not up yet. It will be very soon, but in the meantime, drop me an email. You've got all the YouTube videos, and I can have a chat to you on the phone. Here's something I'd also like to mention to you is this. Traders become what we call psychologically damaged. That is, if you're a trader that hasn't made it, and I deal with mainly experienced traders, probably a good 90% of the people I deal with are experienced. Excuse me one moment. I'm just going to put this on hold. Sorry about this. Sorry, traders, I had someone knocking at my door. So a good 90% of my traders that I deal with are experienced, and one of the challenges for many traders, and I've been just as guilty of this in the past, is going from one technique, one strategy to another, is you do become psychologically damaged. I know a lot of you don't want to hear this, but you become hesitant and skeptical. And what is really important to succeed as a trader is being open-minded for the right reasons. I'm not talking about being foolish here. I'm talking about being open-minded, and they say that the sign of an intelligent person is how open they are to new ideas, and that's really important in coaching. You've got to be open-minded to be coached. It's really critical. So let's go back. Yes, some of these indicators are what we call lagging indicators, but what the lagging indicators do is they set up patterns on the charts. And if you were to say to me what sort of trader I am, I'm a day trader, I have a lot of trades during the day, as you'll see, but I have a set target, then I'll finish for the day. I like to bank my profits and go make a nice cup of coffee or whatever. So most of my trades are fairly mechanical. There are some decisions, personal decisions, such as if I'm around a pivot, which we're about to talk about, or if there's a red flag. Most of you know I'll then exit, and I like to keep my trading fairly simple. So let's have a look at these so we don't spend too much time on this video, because by the way, someone sent me an email the other day and said on my YouTube videos I should keep them shorter. Well, what I'm trying to do, of course, is coach you and train you. So if you're looking at this for the first time, please hang on, pull out a pad, and even if you're one of my coaching clients, as you know, what do I say to have open in front of you? Have your pad and pen handy and please take notes. So let's have a look at these. So at 2:33 my time, the market had been open 3 hours, couple of hours. The main market, this is down in Australia, our local time, by the way. So late morning US time, we had an 89 EMA bounce. Now if you had have got in on this third candle, which is where you would have gone in here, it only hit a maximum of 8 ticks before it reversed. If you weren't sure because you had a number of lower highs coming in here, but your 200 was still heading up, the dark line here, that's the 200 EMA. And the reason I don't normally have this on the chart when I'm doing these YouTubes, but a few of my clients have asked me to put it on, hence I put it on. So you also then had a T10. Now as you know, I love T10s. You had a T10 form, so if you had have taken and waited for the T10, that was worth plus 10. Now as you know, the way I trade, once I'm up 9 or 10 ticks, my target is 11 ticks, I go to break even. So if I had been trading live, which I wasn't, otherwise you would have seen me plot here, I would have been out at break even here. Down here we had a beautiful 200 bounce, 200 EMA bounce. We've come down, there's my signal. You wouldn't have been in till this candle here. Why? You know the rules. Wait until we have a confirmation with our zero lag. So we go further along here and we can see this black dotted line, we're hitting the pivot. We had a pivot bounce here, it would have come straight down, but then I had a T10. Now the reason I didn't mark this up as a T10, it's not a perfect one, because what I like to do when I'm trading a T10, which is also known as a money on the floor, I like to see my long-term stochastic, which is the black line. And let me just get rid of this here so you can see it perhaps easier. See down here, I like to see that popping through the zero line, which it wasn't. That's why I didn't actually mark it up as a T10. But then and by the way, we'd started training here, so we're 20 minutes in our training session. Then we had a T10. I called this trade here with my clients that are overseas, and that was good for 11 ticks. I think it ticked and just touched 12 ticks, but that was good there. We had a lower high for plus 11. Then we had an 89 EMA bounce. Now what's the 89 bounce? You can see you've come down here, see a white paint bar, we've hit it, you're in on this candle, and that was great then for your 11 ticks. So what have we looked at so far? We've had a T10, we've had 89 bounces. So these are really mechanical, straightforward trades. And I'll say this again for my new viewers, when you trade with me, wax on, wax off. We start with one setup, wax on, wax off until you master it. And for those of you who know the Korean archery schools over there, if you're aiming at joining the Korean Olympic team for 3 months, you will draw your bow, not even fire an arrow. You will have thousands of practices just drawing your bow before you actually even get to fire an arrow. So what is really important here is that you practice one strategy, one technique before you move on to another. Now I know what some of you are saying, oh no, I want to move on quicker. But yes, does your trading account reflect that? Are you a profitable trader? If not, please heed my advice. Go back to one trade setup and master one before you move on. Okay, I'm going to get off my high horse. Let's move on. The 89, that was a nice profitable trade. Then we had here, of course, a double top, very, very distinctive. Now with these pivot points, it's not uncommon to punch through these pivots as we've done here. We punched through, we had divergence. It's a T19 trade. Once again, a newer trader, I didn't promote that as a trade, so we didn't take that. But then we had one here, it's a T10. Notice how our long-term stochastic is under the zero line. We've gone up, we've rolled over. That was the trade we called, and very nice one. That was a winner for them. Then we had a 200 bounce here. Now the 200, we didn't quite touch the 200, but we wait until we turn up here, until we turn cyan, which is what's happened here. There's the entry, and away we go. And we also had just here, we had a T10, and that was a maximum of plus 10. Going a little further now, let me just move along here, and we're about to come to my trades in a moment. We had a double top. Look at this, our platinums dropped away, almost, not quite a perfect double top, but it is a double top. You got pivot bounces, you had a T10. Thank you. Now what I say here is, when you're trading against a pivot, use extreme caution. Traders, wait for the sweet spot. If you're not sure, just stand aside. If it's not black and white, particularly for a new trader, when you're short-term trading or day trading a 133 tick, 99 days out of 100, the sweet spot's around the corner. That is, we're waiting for a good trend. Like here you can see we're in consolidation. Look at our 200 is sideways, our 89 EMA is sideways. This is something we cover. These are dangerous territories. If you're not sure, just wait aside. If you're an experienced trader, yes, you're going to take these double tops. You're going to take these T10s because you know overall you do well out of them. But you've got to be quick off the mark too, because if it goes against you, you want to be able to move fairly quickly. So you had a T10, which was a nice one. Then what have we got here? We've gone through, punched through the 200 and the 89. We've got a reversal situation. This is a T2, a slingshot trade, and thank you very much. Now then we had a loser. We called this as a T2. Now the T2, let's look at the T2 rules. We're well oversold with our long-term stochastic. We've gone up, we've rolled over. Natural fact, the entry wasn't to here, but we called this as a trade and was stopped, because remember, our stop is only 2 ticks above our little swing high here. Stopped on that one, but then immediately we had another trade here, and which was a T2, and it turned into a T1 as well. And the codes, by the way, traders, you pick those up in training. They're very straightforward, and away we go. Now you may notice here I've put in here T89s. Now a T89 trade is a counter trend trade. It's generally a change in trend direction that you're going for a good 2 to 1. In other words, for every dollar you risk, you're going to pick up 2. They're a good 65-75% accurate trade, but you've got to be quick and you've got to be willing to move your stop. So here for this one, it would have been here. You would have been in not till here. Now the reason this was a borderline is you want your entry to be outside the channel, but I don't want to turn into, I'm going to slap myself on the hand. I shouldn't be really talking about these at the moment. It's confusing you. Too many trade setups we're going to be talking about. So let's move on. Traders, send me an email if you're interested in the T89s. They're a great trade, very great trade, and I actually took one up here, which I'm about to explain. You'll see what happened. So let's have a look what happened here. So up here we had a bounce off the 200. Everything was heading up very strongly at this stage, and we didn't take that one. Here then I had a beautiful T2. Here you can see I actually went long for 10 contracts on this one, on this candle, because I had, not only was it a T2, but I had a T1. So I had a double confirmation. I entered here and I was out at plus 11 ticks. So you can see with TradeStation I went to market there at 10, so it was a market order, and I was out here. That was in the end good for a good 14-15 ticks plus. I got out. My target on this market is 10 ticks. And down here we then had another T2. For comment here I had don't talk and trade. We're actually discussing this trade with my clients at the time. I wasn't focused. Of course you're not going to be in that situation. This is one of the reasons why I don't generally live trade when I'm talking or when I'm training, because it's so easy to actually muck a trade up. So I missed this one. If I had have taken this trade, I wouldn't have been out till here, and that's where it actually got out at plus 11. But here's what I did do, which is almost in conflict with this, is I shorted on a T89. Now a T89 trade is a counter trend trade when the entry is well out of the channel. Now where's my stop? My stop is going to be on the other side of the pivot, which in actual fact my stop in this particular trade was actually plus or minus 11. It hit minus 10, so I was one tick from being stopped out, which is on the other side of this pivot, which is a logical spot to put it. Now on reflection, I actually should have waited till I was closer to the pivot, and you can see here the logical one would have been to wait for this formation here, but it was a counter trend trade. I know these trades, and I got out. You can see I shorted here. It went against me 10. I was very close to being stopped, and I was out. So I just had 2 winning trades. In actual fact, I should have taken that one, this one, and shorted just here, so I would have been up 3 trades, but not to worry. Down here I had another beautiful 89. This is my signs, my 89 200 EMA bounce. These you take every day of the week. Why? Because they're profitable trades. They're a great trading strategy. Here from there to there it was out plus 11. Now I then shorted the market. Here you can see my trade entry right here. Why? This is a T11. A T11 is basically where I have my paint bar plot. I've got a lower high. You can see I've got that there, and I'm bouncing around. And quite often when you get these bounces off these longer term EMAs, we've got a change in trend direction. I was willing to carry my stop, would have been once again above this pivot has been holding, and it held back further off to the left there. I shorted and I was out here. It was a bit hairy here actually. I was a little bit concerned because you can see here I was bouncing for a few minutes. I bounced for about 15 minutes. I was bouncing on these pivots. Sorry, not on the pivots, on the longer term EMAs. You can see my EMAs are going sideways and I'm bouncing around. You know, I was concerned that I might bounce up, but then punch through, and it would have been good for 15 ticks, but as you know my target is 11 ticks. It was also, I knew I was coming down for a second and a third test of the 89 and 200. I punched through. Thank you. This could have been a nice long, which would have been for me a counter trend trade. You can see here I've got divergence on our platinum. We've got a lower low, so this is a real classic divergence trade, which would have paid off very, very nicely. If you had have taken that one, it didn't qualify under my trading rules at the time. Then you had a very nice pivot bounce again. Now you see when you get these nice pivot bounces, what I'm looking for is my paint bar, which is what we got here. You would have been in on this candle if you had have taken that trade, and it bounced down. You also here had a T10. Now this is where I then took my 4th and final trade for the day. Now here, by the way, I was sitting it out this here to be very cautious because the 89 and a 200 are sideways. Just be very, very careful. Now at this stage also the YM and the ES are trending up, yet my NQ is trying to punch down, so you just want to be extra cautious. The reason I took this trade and I shorted here, you can see my entry, and I didn't take it here. This is a lovely T10, and for those students of mine, you know I love the T10, was the size of the candle. I decided just to hold off, and I'm glad I did get punched up, even though my stop would have been 2 ticks above that high. See how my long-term stochastic is heading down, my short-term's gone up. It's a classic T10 setup. My stop, if I had have taken it there, would have been 2 ticks above. Now I waited and I shorted the market here, which meant my stop was going to be smaller than 2 ticks. Just my risk-reward ratio, that met my risk-reward ratio better, and I was out. Now here's what happened. It hit plus 10 here. I then went to minus 2, to plus 2 I should say, so I would have locked my profit in. I then got filled at plus 11 on 9 of my 10 contracts. I got out at plus 10. One of them I wasn't filled. I moved my stop down and I locked out plus 4 when then I got stopped out at that one. So be prepared. So a couple of times there are trades I would have taken, or like on this one, when I go to plus 9 or plus 10, I go to break evens because I'm not willing to give that back. In that particular case there, I dropped it down to break even +2. So in other words, it covered my brokerage. I still would have been out with a small profit, because there's something else here. The market is heading towards the end of the day. Now what's quite often happens here, and the market will just go sideways. It only had 15, well, you can see here it traded for longer than that, but with real volume it only goes for another 15 minutes, and so I was ready to get out. So if anything, I probably left this trade a little late, but it paid off. 9 contracts out at +11, 1 out at +2, so still a very small profit. So once again, another day of 4 out of 4. But the main lesson I'd like to get across, traders, is that you can see here we've got these pivot bounces here, and quite often here, and I had this trade here, and the point I had for some of my longer term traders is trade the pivots. You'll see this day in day out where you trade from one pivot to another, and that's another training session for another time to talk about that. So traders, please feel free to drop me an email at rayftrader@gmail, and I'm quite happy to chat to you. My consulting, I drop down to a minimum of 1 hour at a time, and most people will hire me for 5 to 10 hours, and we usually do 1 hour a day. But if you want to be fast-tracked on how to take these high probability trades, please drop me an email. Traders, you can profit as a day trader. If you're already a day trader and you've been struggling for years, we do need to go back to the start and really peel back those layers of the onion and get you back to the basics. But trading is fun. Now what I am about to do is I'm about to go and do a recap of the Forex market as well, because we absolutely kick butt on the Forex market. And I don't know if you can see, shorted. This is a long trade, T89 double top. So if you're interested in trading FX, look at these. Shorted, stopped on this one. Oh, sorry, no, we didn't take that one, and the reason you wouldn't have taken that, look at my zero lag. So I'm about to do that video, so you're welcome to come and watch this. So please subscribe to my channel or drop me an email. Thank you, traders.